All right, so have you ever imagined like turning just a few minutes online into a pile of cash?
Well, that's certainly a dream for many.
We're talking about those claims you see like make $15,413 in 6 minutes.
Oh yeah, the ones that really catch your eye.
Exactly. And this time it all revolves around trading on this platform called Pocket Option. I actually have a bunch of YouTube video transcripts here from channels like Katie Tutorials and Guru Trader, even one called Michael Trader Best Moments.
Catchy title?
Very kitschy.
What?
Yeah, and today our goal is to kind of cut through all the hype and really understand the strategies and tools these traders are actually using.
Sounds like a plan, because there's a lot of noise out there.
A lot of noise, and we want to break it down so that it makes sense, even if you've never even thought about buying or selling anything online,
Right, make it accessible to everyone.
Exactly. So think of this as like getting a backstage pass to their methods without needing, a fancy finance degree or anything.
I like that, a backstage pass to the world of trading.
So let's start with Katie Tutorials and that bold claim of theirs. Their whole strategy centers on just 3 main tools.
3 tools, huh? That's interesting.
Yeah, they use 2 moving averages, a green one that looks at the average price over the past 6 periods, and then a white one that does the same but over the last 14.
Okay, so they're looking at both short-term and a slightly longer-term price trends with those.
Exactly. And then they add in this thing called the parabolic SAR, which they actually tweak a bit. They keep the initial settings, but then bump up the maximum acceleration to 0.3. They want it to react faster to changes, and they make the dots yellow.
Ah, so they're really trying to fine-tune this indicator to match their style.
Exactly. And they're watching all this play out on these super short-term charts. We're talking 15-second Japanese candlesticks.
Wow, so each bar on the chart is just 15 seconds of price movement? That's pretty fast-paced.
And their trades only last 1 minute?
Okay, so everything's happening very quickly.
Very quickly. Yeah. And a crucial point Katie Tutorials really emphasizes is that this whole strategy only works if there are clear trends in whatever currency pair they're trading.
So no trends, no dice.
Basically, yeah. If the market isn't clearly moving up or down, this whole thing falls apart.
Makes sense, you're going to have some direction to work with.
Right. And to actually enter a trade, they first want to see either an upward or a downward trend starting to form.
So they're looking for that initial momentum.
Then they look at the parabolic SAR, those yellow dots we talked about, and they have this rule, no more than 5 consecutive dots, ideally.
What's the thinking behind that?
They're trying to avoid getting caught in a trade where the trend might be like overextended and about to reverse.
I'll play it safe.
And then finally, those moving average lines, the green and white ones, need to actually cross over in the direction of the trend.
So the crossover acts as like a final confirmation.
Exactly, and the transcript actually gives a couple of great examples. In one, they see an upward trend starting in the shorter moving average, crosses above the longer one, and bam, those yellow parabolic SAR dots pop up below the price.
That's their signal.
To buy, and it turns out to be a winner. Then they describe a very similar situation, but in reverse, a downward trend moving average is crossed this time. The shorter one dips below the longer one. Parabolic SAR dots are above the price, and they sell successfully.
So it's all about riding that initial wave of the trend.
And they get pretty specific too. Katie Tutorials even says the best possible entries are when those moving averages just start to cross and the parabolic SAR is just beginning to show its dots in the direction of the trend, especially if it lines up with what they consider a longer-term trend.
So they're all about timing, trying to catch that sweet spot right at the beginning.
Right. It's like they want to hop on a train just as it's leaving the station, Be there for the main part of the journey.
Interesting analogy.
So let's switch gears now and look at Guru Trader.
All right, Guru Trader. What do they have for us?
Well, their hosts waste no time. They basically say, hey, I'm going to show you how to potentially make money every single day using Pocket Option.
Bold statement.
Very bold. And they immediately reveal their indicator setup. They've got 2 exponential moving averages, or EMAs.
Now, those are similar to simple moving averages, right?
Oh, yeah, but they put more weight on recent prices, so they react a bit faster. They've got a shorter-term EMA with a period of 5, which they've changed the color of, and then a longer-term EMA. They don't say the period, but it's increased, and they've made it red.
Okay, so we've got our moving averages, and
then they add in the Williams per SAR indicator, which they mention they've tweaked specifically for short-term quoting markets.
I'm trying to fine-tune it for those quick price swings.
Exactly. And the first trade they actually describe is a buy that sounds like it was pretty intense.
Oh, how so?
So the price had been kind of bumping up against this resistance level, basically a ceiling it couldn't break above, but then it managed to push through.
Okay, so a potential breakout.
Yeah, but at the same time, the Williams persona was showing the market as overbought.
Oh, so that's a mixed signal.
Right. The host even says they barely made it, which really gives you a sense of how volatile the market was at that moment.
Yes, sometimes those breakouts can be tricky, false starts and all that.
Exactly. And then they walk us through a sell trade they made when the price was, again, hitting a resistance level.
Oh, back to the resistance.
Yeah. And this time they got confirmation from the Williams Persar, which was also hitting a resistance line that the indicator itself had formed.
Interesting. So it's like the indicator is mirroring the price action.
Yeah, this one seems more like a textbook example of technical analysis. Sell when the price hits a ceiling and an overbought indicator backs it up.
Makes sense.
Now, one thing that pops up in the Guru Trader video, and it's actually quite common across these kinds of channels, is the host really urging viewers to join their Telegram channel.
Oh, yeah, they always have that plug.
Right, promising more specific signals and secrets.
Got to keep the viewers engaged somehow.
Exactly. So it's something to keep in mind. The information they give out publicly might just be the tip of the iceberg.
The teaser to get you hooked?
Exactly. And later on, Guru Trader actually breaks down another sell trade. This time, the price is, again, testing that resistance level, but the Williams Persarn tries to push above a green resistance line the trader has drawn on the indicator, but it fails.
So another sign of potential weakness.
Exactly. And on top of that, the moving averages are starting to get closer together. They call it consolidating. And they're seeing signs that sellers are stepping in, putting downward pressure on the price.
Okay, so they're looking at multiple factors here, not just one indicator.
Right. Building a case for the trade. And just like KD Tutorial's Guru Trader also really stresses that figuring out well-established trends is the real key to making money consistently.
So even with the short-term trades, the big picture trend still matters.
Exactly. It's like finding those small opportunities that fit into the larger market direction.
Okay, makes sense. Let's move on to Michael Trader best moments then. What are they doing?
Well, they're using a familiar combo of indicators. They've got two exponential moving averages, just like Guru Trader.
So those are becoming quite popular, it seems.
And they've also brought back the parabolic SAR, which was a key part of the KD Tutorials strategy.
Okay, so some overlap in the tools, but I bet they use them differently.
Exactly. That's what's so interesting. Different traders can take the same indicators and apply them in very different ways.
Absolutely. It's all about interpretation and strategy.
So the first trade Michael Trader shows us is a sell on the GBPO currency pair.
British pound against the Australian dollar.
Right. And their reason is that the price has dipped below both of their moving averages, which to them is a clear bearish signal.
Makes sense. Price below the averages usually means a downward trend.
And they point out that the price had actually tried to break above those moving averages earlier, but failed, which they see as more evidence of selling pressure. And to top it all off, the parabolic SAR is showing a strong sell signal with those dots above the price.
So they've got multiple indicators all pointing in the same direction.
Exactly. Then they describe a buy trade on GBP-JPY. This time, the situation's reversed. The price is above both moving averages, and the parabolic SAR has flipped to a buy signal with dots below the price.
Okay, so a classic bullish setup.
Right. But they also mentioned this other indicator, the vortex indicator, which is used to assess trend strength and direction, and it was showing potential overbuying.
Interesting. So even though the overall picture was bullish, there was a hint that the price might have risen too far too fast.
Exactly. But they still saw room for it to move higher, and it did. Then Michael Trader takes us through a sell trade that's based on a specific pattern they spotted on the AUCAD chart called a double hike candle pattern.
I'm not familiar with that one.
It's basically two consecutive long bullish candles followed by a reversal candle, and it can suggest that the upward momentum is fading.
Interesting. So they're incorporating candlestick patterns into their analysis as well.
And in this case, the price had also reached the upper boundary of what they called a flat channel. Essentially, it had been trading sideways within a certain range.
Okay, so they were anticipating a move back down from that upper boundary.
Exactly. And they go on to describe another sell trade that's really similar to their first one. The price candle is below all the moving averages. There was an earlier failed attempt to break above, and the parabolic SAR is firmly in sell territory.
So again, multiple indicators confirming their bias.
Right. Then things get a little bit different. They describe a counter-trend sell on AUDNZD.
Counter trends, so they're going against the current momentum.
Exactly. The price had made a big jump upward with 3 consecutive green candles breaking above the moving averages. But Michael Trader decided to sell anyway because the vortex indicator was showing overbought conditions.
That's definitely a riskier move, betting against the trend like that.
It is. And finally, they walk us through a sell trade on GBPOD, where the price starts heading down at a strong resisting zone after failing to break through it multiple times. They mention something called their master bound strategy.
Sounds intriguing, like a secret weapon.
Yeah, and they're expecting the price to drop, but it hints that there's a lot more to their approach than just those individual indicators.
Right, like a whole underlying philosophy guiding their decisions.
So if we step back and look at all three of these traders, you start to see some clear patterns and also some interesting differences.
Yeah, definitely some common threads, but also unique twists.
Moving averages and the parabolic SAR pop up all over the place, but the specific settings they use and how they actually interpret the signals can vary a lot.
It really shows that technical analysis isn't an exact science. There's a lot of room for individual interpretation and style.
Exactly. And the time frames they seem to focus on are also different. Katie Tutorials is all about those super fast 15-second charts, while Guru Trader and Michael Trader seem to be looking at things over a slightly longer period.
Trading on those ultra-short time frames like Katie Tutorials does requires incredibly quick thinking and a high tolerance for all that market noise,
Yeah.
the constant little price fluctuations.
Yeah, and we also see different ways of spotting those trading opportunities. Katie Tutorials really waits for a clear trend to emerge, while Guru Trader and Michael Trader are more willing to take trades at those key support and resistance levels.
Different approaches for different market conditions and personalities, I guess.
Right, and it's worth noting that Guru Trader does take the time to mention the risks of trading, which is always a good thing.
Definitely responsible trading always starts with understanding and managing risk.
And as we talked about earlier, that invitation to join private channels for more exclusive content and signals is a recurring theme.
It is, and it's something to be cautious about. The quality and reliability of those offerings can vary a lot.
So the key takeaway for you, the listener, is these YouTube traders are showcasing a whole range of ways to use technical indicators and develop your own trading strategies on the Pocket Option platform.
And while certain tools like moving averages and the parabolic SAR show up a lot, the specific way they're used and the overall approach to finding and executing trades can differ significantly.
It really highlights the importance of understanding those core concepts of trend analysis and how those indicators work, but also developing your own unique approach.
And always remembering that past performance is never a guarantee of future results. Trading always involves risk.
Right. And here's a final thought for you to chew on. Given how fast-paced and short-term the trading is that's often shown in these videos, how much of a role do you think things like quick decision-making skills and your own personal risk tolerance play in making these approaches work?
It's a really important question because it gets at the heart of finding a trading style that actually suits you and your personality.
And it makes you think about that balance between the thrill of potential quick wins and the very real risks that come with trading in such a fast-moving environment.